In this video, we're going to talk about chart patterns for beginners. So this is going to be very much an introduction to chart patterns, and we're going to talk about a popular reversal pattern and then touch on a popular continuation pattern. So my name is Tyler Stokes from StokesTrades.com. I'm on a journey to become a full-time day trader. We are studying technical analysis, and we are at the point now where we are starting to look at some chart patterns. So what we're going to do here is just do a very intro to this subject matter. We're going to look at the head and shoulders pattern, which is a very popular reversal pattern. And then we're also going to touch on a bull flag pattern. And there's actually one going on right now with Tesla stock. So we're going to actually go and look at that as it's forming sort of in real time. So it is June 12th and I'm recording this video now, and some of the information that I've gathered for this video I got over the last few days. So it will be interesting to see this bull flag pattern, how it plays out over the next few days, especially Thursday, June 13th is when Tesla has their annual shareholders meeting, and there's an important vote that's going on. So we might see that affect the stock price as well. So just perfect timing to kind of share a continuation pattern with that stock. So we're going to jump to that at the end of the video. So basically, when it comes to chart patterns, we're beginners and we're sort of looking at this section of technical analysis now. If we kind of think about how you make successful trades, well, you sort of need conviction in what you're doing, followed by some sort of market confirmation. So what if I told you that this conviction often comes from recognizing patterns in market price action in what's going on with the stock chart. So once you get more experience and you're actually trading and you're doing some of this stuff, you're going to be able to spot these patterns and make these trades. And a lot of people that you might be following on social media that do this, that's what they're doing. They're spotting these patterns. So if you think about it, imagine having the tools to spot these patterns, makes informed decisions, and that is a big part of training. That's what we're going to cover sort of in this introduction to these chart patterns. But there is an important lesson that I want to go over, and I got this from the author John Murphy. He has the textbook Technical Analysis of the Financial Markets. It's one that I am using to study technical analysis, and if you'd like to find a link to that, you can find it below this video. But basically what he's saying is that understanding chart patterns and reversals and continuation patterns, it's a fundamental aspect to technical analysis. And while chart patterns work most of the time, so the head and shoulders one that we're going to look at here has a pretty good success rate, it's important to understand that they don't work all the time. So no pattern is foolproof, and market conditions can cause patterns to fail. So this uncertainty is an inherent part of trading. It's something you need to accept. And it's vital to accept that and just know that, yes, these might have a good probability of, panning out to the direction that you're going to trade, but certainly they are not foolproof. And then he also makes a point that the ability to identify when a pattern is actually wrong is just as important as recognizing when it is right. So knowing when to cut your losses is a critical skill for any trader. I've been studying trading for 5.5 months now. I keep seeing this theme and this message that limiting losses can be the difference between a successful trading career and an unsuccessful one. So it's important to be able to spot these patterns, but also be able to understand when something you thought was a pattern is maybe breaks down and is no longer one. So just something to consider. So understanding chart patterns, basically chart patterns, what they are, they're formations created by the price movements of a security on a chart. So we're talking stocks most of the time, but these chart patterns are also available on the Forex market when you're trading currency pairs and so on. So what they do is they reflect the psychological behavior of market participants and can predict future price movements. So again, that's the ideal scenario here. We're seeing these chart patterns, they're forming, and then we want to predict where the price of the stock or the security is going to go. And again, when you can recognize these patterns, it will help you as a trader to make informed decisions and increase your chances of success. And you're going to use these chart patterns along with other information that you have, other skill and technical analysis that you will develop, other indicators, and so on. So it just kind of puts all these things in your toolbox to be able to put on a trade and so on. So before we review the patterns, it's kind of worth going over just a quick refresh of what a trend actually is. So, in some previous videos, we talked about trends and trend lines. So obviously what we have is we have uptrends, downtrends, and sideways trends. So remember, an uptrend is defined by higher highs and lower lows. So these highs are often referred to as peaks and the lows are referred to as troughs. So if you have a high, and remember, stocks go up and down in zigzags. So if we go up to a high and then you regress a little bit and come back down to a trough, and then your next high is higher than the previous high, and as you regress and come down a bit, that low is higher than the previous low, then you are in an uptrend. You can see that kind of moving up and to the right. And then a downtrend is basically the opposite of that. So it's lower highs and lower lows. So the stock is going zigzagging up and down as it's progressing down and to the right. And then a sideways trend, also known as a horizontal trend, occurs with highs and lows that sort of remain in a relatively consistent range. So again, important to know and understand what trends are when you're looking at actual patterns. So the common reversal pattern that we want to talk about in a bit more detail here, and we're going to see an image of it as well, is the head and shoulders reversal pattern. So a reversal pattern, basically what this is going to show you is a change in the prevailing trend. So they signal that the existing trend is losing momentum and the new trend is likely to begin. So again, as always, recognizing these patterns, it's going to help you as a trader to spot potential turning points in the market where you can put on a trade. So the head and shoulders reversal pattern, that's one of the more popular ones and one of the more reliable ones as well. Don't quote me on the exact number in terms of statistics, but I think there were some studies done and it's like high 70s, high 80s, that when this actual pattern forms, the stock is going to reverse its trend. So it's made up of a shoulder, a head, and another shoulder. So that's why it's called the head and shoulders reversal pattern. So again, the left shoulder, that's sort of the first peak that forms after a strong uptrend, and it's followed by a decline. And then the second peak is higher than the first one. And that represents the highest point in the pattern, followed by another decline. And then you've got the right shoulder, so a third peak that is lower than the head, but similar heights to the other shoulder. And then you have what's called the neckline. So here we have it sort of drawn out there. So the neckline is here below the two shoulders. And this line is significant because as the pattern reverses and as the stock comes down and crosses this neckline right here, that is sort of an indication that the reversal is in place and the stock, the security, will continue to fall. So, the head and shoulders pattern, the significance of this, basically it marks a weakening of the uptrend and a potential reversal. So here we have the uptrend here. And again, in real life, we'll go and look at some images. It's not going to always be this perfect, but this is the general form that it's going to take. So when the price breaks below the neckline, it confirms that the pattern and the signal is now in a bearish reversal. So again, here's the image, and we'll just talk a little bit more in terms of detail here. So this image right here is actually from the textbook, Technical Analysis for the financial market. So the forming of the left shoulder, so the price rises to a peak and then declines. So here's the price, and it rises to this area here, and then it declines. You can see the volume bars here, and it's going to rise on quite an increase in volume. So basically this peak typically occurs after an extended uptrend. So the uptrend here could be going on for quite a bit, and then we're going to potentially lose some momentum and reverse the trend. And again, volume here tends to be high as this left shoulder forms. So we can see the volume bars here. So as this left shoulder forms in the price, the volume is quite high. And then we have the price reversing down. So we have the price coming down to basically the trough here. So here's the shoulder, and then point B here is the beginning of the neckline. And then the stock rises back up higher than the left shoulder to sort of this top area of this pattern. So this is the head of the head and shoulders pattern. And the volume here can sort of decrease slightly. So volume doesn't always have to follow this pattern exactly, but generally you're going to have more volume leading into the first shoulder, and then the volume is going to be less as the stock rises again to the peak. And we're going to drop down to the next trough here at point D. So now we can cross this line as the neckline, and then we rise again to the right shoulder here at point E. And again, volume is generally going to be lower as well. And this shoulder is generally going to be around the same area of the first shoulder. So the price is going to decline from the head up into point D, and then back up into the right shoulder equal to the left one. Now the neckline breakout, again, as we mentioned, is important because the pattern is confirmed when the price breaks below the neckline with increased volume. So if we go back up here and we can see again, volume is rising back up here as now we have a reversal and the price is coming down off the right shoulder here. And as soon as it crosses this neckline, that is what is believed to be a confirmation that we have reversed. We've gone from an uptrend and we're going down into a downtrend. And you can see the volume bars here are rising as the price is lowering down here and crosses through the neckline. So again, it just talking, imagine, you have a stock and it's been on an uptrend. The price rises to form that left shoulder. It declines, it rises back up to form the head, which is slightly higher than the shoulder. And it declines again, rises back up to the right shoulder. And as the price declines, it breaks that neckline. It confirms that, we have a reversal here and the pattern is intact. It is confirmed, and then we are going to move into a downtrend. So volume is important. Plays a critical role in this pattern. Typically, volume is going to be highest in the formation of the left shoulder, and then it decreases as the head forms, and then again it will increase again as you fall down and you break the neckline. Now, there is an inverse head and shoulders, and basically that's just the sort of a mirror image of the head and shoulders pattern, but you're in a downtrend, and then the opposite is happening, and then you're going to bounce up into an uptrend. So here is an image. Again, we sort of studied this one here. This is from the textbook, Technical Analysis of the Financial Markets. But if we just sort of jump over to Google Image and you search Google Images, you can find more real examples of this. And if we jump over to X, we can also see some examples here. So let's go to X right now. And if you just plug in, head and shoulders pattern in X, and you search for some topics, you can see here we have some posts and some threads about this. So if we just look at this particular one, this is for Bitcoin, and this is a an inverse head and shoulder, so the opposite of what we just talked about. Here we've got the left shoulder forming here, and then we've got the head, which is lower, and then we've got the right shoulder forming here. So this pattern, if it plays out, the price of Bitcoin should be going up and to the right. We've got some other good examples here. Here's another inverse head and shoulders that's looking good. Okay, this is Bitcoin again. So we've got the shoulder forming here, and then we've got the head lower, and then we've got the second shoulder. And again, you're expecting the price to move up and to the right. So the X app is a good place to view some of these. Okay, here we've got an example here. So we've got the left shoulder forming here. We don't have the volume bars on this particular one, but then we're rising up, and then this is the head, and the neckline is here, and then here's the right shoulder. And as it crosses down and crosses this neckline, now we can confirm that we are into a downtrend. So here you can see the pattern in real examples certainly is not as perfect as what we will see from that textbook image, but this is sort of how these patterns play out. So we've got a shoulder, we've got a head, and then we have another shoulder. It might be some other good examples. Here's another good one. So rising up here, we've got the left shoulder here. We've got a peak coming back down, and then we've got this trough here, and then we go back up to the head. So again, higher than the left shoulder, and then coming back down, and then we've got the right shoulder playing out here. And as the security or the stock, I'm not sure what this is, this might be the Forex market, comes down and crosses this neckline, we can see that we are projecting the security to fall and the trend to reverse down here. So those are just some real life examples of the head and shoulders patterns. You can kind of come to X and you can sort of look through more of these. Again, there's just some more examples here and learn more about them. And again, here's a diagram. It certainly does not always look this perfect, but that's the general pattern for the head and shoulders pattern. So in terms of some other reversal patterns, focusing on the head and shoulders one and sort of studying that and understanding that, it's going to help you understand some of these other ones. We've got things like the double tops and double bottoms. So it's basically a double top, we've got an M shape, and double bottom, we'd have a W shape. So similar to the head and shoulders, the way it's working, but we just have a different sort of formation. We've got an M and we've got a W for the bottom. We've got triple tops as well. So these also happen where we've got, a sort of a head and shoulders type of move, but, the shoulders are the M. So each peak is going to sort of be in the same sort of resistance level. You've got rounding bottoms, V bottoms, and so on. So quite, certainly a lot of other patterns to study and learn about. Here for this introduction video, we don't want to go into too much detail about them. Studying that head and shoulders pattern and just understanding that one first, and then looking to some of the other ones, I think is going to be the best path for most beginners. But I do want to go over some key elements that are shared by all reversal patterns, and it's worth sort of just reviewing these quickly to help us sort of understand these patterns a bit better. So the first one is that there needs to be an existing trend. So for a reversal pattern to actually exist or be valid, there must be some established trend going on to reverse. So you must have, generally in those head and shoulder patterns, you'll have a big uptrend, a standard one, or a trend up into the head and shoulders, or you'll be in a significant downtrend to have an inverse head and shoulder. So again, there needs to be a trend that is there for a reversal to happen. Breaking of the trend line. So the reversal pattern is confirmed when price breaks the trend line of the existing trend, signaling a new trend is going to happen. So, breaking the trend line or breaking the neckline, those are significant moments in these different chart patterns. The size and the movement. So the larger the pattern often leads to the greater subsequent price move. So generally, the head and shoulders pattern there that we looked at, those can span over the course of quite a long time. So generally, it's said that the longer time span that head and shoulders forms, the more significant the move could be in the reversal. Again, pattern development. So some of these patterns take quite a while to develop. So these aren't going to develop in a day. Sometimes there's several weeks or months, and that you as a trader can be tracking, and you can take action when you think it is right to do so. Topping patterns, these typically have shorter durations, might be a bit more volatile than the bottom patterns. And then volume, again, volume is going to play a critical role in many of these. Typically, again, volume will increase at the start of the new trend. So, if you're in a bullish trend and there is a reversal, that volume should expand as you are in the downside or the upside. So wherever there's going to be a breakout. So that's sort of our discussion here for reversal patterns. And again, the head and shoulders one is a good one to learn about, but there are certainly other ones that you will want to get familiar with. Now, the other type of patterns are what are called continuation patterns. So reversal pattern, obviously we have a trend that is going to reverse. Well, a continuation pattern, these suggest that the existing trend will continue after a brief period of consolidation. So recognizing these patterns can help traders capitalize on an ongoing trend. So a trend is moving, say, up and to the right, and then it just takes a little bit of a breather and may move sideways for a bit and then continue on. So a popular one is the bullish flag pattern. So the bullish flag pattern it's a continuation pattern. It indicates a brief period of consolidation before the prevailing uptrend might resume. So this pattern is characterized by a sharp price movement, which is called the flagpole, followed by a rectangular consolidation. So that is referred to as the flag. And from the textbook that I've been studying, John mentions that the bullish flag is actually one of the most reliable continuation patterns. Often traders, it gives them a strong signal, excuse me, to continue riding the trend. So if we kind of just open this and take an image of this and open this image here in a new tab, we can see that here is the bullish flag from that is currently forming in Tesla. So it's June 12th now, and we'll see how this pans out over the next few days. But here we've got the flagpole. So we've got a steep rise here in this green bar with quite a bit of volume here compared to some of the other days. And then we have a period of consolidation. So this is a weekly chart. So these bars are weekly. So we've got a flag here, a steep rise, and then we've got a continuation pattern here forming the flag. And then what is expected is another breakout after this consolidation sort of passes. So below in the article here, for reference, basically I have a video that you can play if you want to get access to this article. It is below this video. And basically I came across this from this post on X from the great Matsby. And basically he has a video here that you can come and watch, and he explains what's going on with this bull pattern in greater detail. I'm very much just a beginner at this stage right now. The great Matsby is very well versed in technical analysis. So I would recommend that you go and reference this video. That is where I watched that video and found this bullish pattern that is happening right now as we're sort of making this video in Tesla. So I wanted to share that here. But again, the resource and the reference, the reference that I found is from that particular person on X. So I would recommend that you check that out. So again, the bullish flag consists of a small sort of parallelogram or rectangle that slopes against the prevailing uptrend. So you can kind of see here that we're sort of sloping down a little bit there. This pattern typically forms after a strong upward price movement. So we sort of had that here. We've got this green candle bar that has shot up here. So we've gone from, about the 140s up into the, high mid 180s there. And where the price action consolidates in a downward sloping channel. So that's exactly what we're seeing here, which is kind of cool to talk about these charts. And we're seeing something in real time as we're sort of making this video. And the significance of this bullish flag pattern suggests that the price is going to continue to move in the direction of the preceding trend after the consolidation phase. And the breakout from this flag should occur with an increase in volume, confirming the continuation uptrend. So we're recording right now. It is June 12th. This is Tesla stock. Tesla actually has an annual shareholders meeting where there's a big vote for Elon's compensation plan. So that might factor into what happens here with this stock. It's sort of been consolidating for several weeks now. And then, if there is something that might happen with that shareholder meeting, this potentially might break out there. So that's just something to keep in mind as well. June 13th at the end of the day, that report will come out. So it'll be interesting Friday, June 14th to kind of check back with this pattern and see if something has changed with it. So I wanted to kind of share that with you. That's a bullish flag pattern, continuation pattern. There are several others that you will want to eventually get familiar with. There's triangles, there's the flag we just looked at. There's also pennants where, the shape is slightly different. There's channels and wedges and so on. So, in summary, for the continuation pattern, reversal patterns basically indicate that a change in the prevailing trend is happening, whereas continuation patterns suggest that the current trend will resume after a brief period of consolidation. So understanding the differences between these two types of patterns, again, it's going to be important for you. And we haven't covered all of them there. You'll want to look at images, study from various textbooks or other sources to really be able to understand and spot them when you are studying charts. So again, continuation patterns, such as triangles, flags, and pennants. They're going to help you identify opportunities to sort of rejoin the prevailing trend, which is also good. The trend is your friend, so to speak, sometimes. So, noticing those and then getting back in is going to be a good strategy for many types of trades. And again, when you are well versed in both of these, it's going to really help you navigate the markets. And again, using these with other indicators as just part of your overall toolkit is going to help you make some profitable trades. So just sort of summing up this video, some things to consider here. We basically in this video just reviewed the basics of chart patterns. So we talked a little bit about them, talked about that they're not foolproof. You'd want to also use some other indicators, but at the same time, these patterns happen with technical analysis. Price action discounts everything. The price moves in trends and history repeats itself. So these patterns do have good success rates, especially the head and shoulders one. So as a day trader, as someone who's studying this and wanting to become one, it's important that you are able to know these patterns and recognize them, but also recognize and understand that certainly they aren't foolproof. And it's also going to be important to be able to see when maybe your analysis was wrong and limit your losses as you actually start trading. So thanks so much for watching. It'll be interesting over the next couple of days to see if that bull flag pattern worked out for Tesla, and if Tesla stock sort of rose after this annual shareholders meeting. So I'll be checking that out. Thanks so much for watching. Subscribe to the channel. If you've not downloaded the 6-month blueprint, that outlines everything that I'm personally doing over the first 6 months as I have embarked on this journey to become a full-time day trader. So you can get access to that below the video, and any sort of resources or links that I've mentioned in here, I will include those below the video as well. So thanks so much for watching. I will talk to you in the next one.